Hey guys, it is Julie here with TipRanks, and today we're taking a look at 3 stocks that have recent buy ratings from top-ranked analysts. So let's get into it. Alright guys, welcome back. Thank you all so much for being here and happy Friday. As I said, today we're looking at companies that have recently gotten buy ratings from some top ranked analysts. Now these analysts today are in the top 10 of all analysts ranked on TipRanks. That's over 8,400. Those rankings are based on past performance and success, so helps you know who you can trust on Wall Street. Of course, if you want to take a look for yourself, you can head over to the TipRanks website or download the TipRanks mobile app by following the link down below. So today we're going to take a look at these companies, what it is that they do, and what these top analysts are predicting for their stock's future. So let's dive right in. First up, we're taking a look at analyst Mark Lipacis from Jefferies. He currently holds the number 2 spot. Mark has an impressive 81% success rating over the last 2 years and an average return of 65%. His most recent rating came in just yesterday on June 8th on LRCX. Now he has had 7 ratings on this stock before with an 80% success rate. LRCX manufactures, refurbishes, and services semiconductor processing equipment. They are a global supplier of innovative wafer fabrication equipment and services to the semiconductor industry. Their equipment and services allow customers to build smaller and better performing devices. In fact, today nearly every advanced chip is built with Lam technology. Trading under the ticker LRCX, their stock is currently priced at $613 per share. They've seen growth of 26% over the past year and are up 25.5% over the last few months. Their last earnings report was back in April, where they came out with a solid earnings beat. They reported earnings per share of $6.99, coming in well ahead of the expectations of $6.52. They also reported revenue of $3.87 billion. Their next earnings report will be coming up near the end of July, where analysts are anticipating earnings of $5.11 per share. LRCX also pays a quarterly dividend. Their current quarterly dividend is $1.73 per share for a dividend yield of 1.09% and a very healthy payout ratio at 18%. That next ex-dividend date is coming up soon on June 13th for payment on July 5th. Their stock currently has 16 analyst ratings, coming in as a moderate buy, and of course the most recent rating came in just yesterday from our top analyst Mark. Overall, it has 11 buys and 5 holds. The average price target is actually $570, which would be a downside of 7%, but that is because a lot of our ratings are coming in from a couple of months ago, and the stock has been performing well and has already surpassed those price targets. Looking at the most recent from the past couple of weeks, we do have a hold with an upside of 1%, and then Mark with his rating here of 14% upside. He increased his price target $100 up to $700. The second top-ranked analyst we're taking a look at is Ross Seymour from Deutsche Bank, who is currently ranked number 7. He has a success rate of 80% over the last 2 years with an average return of 47%. His most recent rating came in yesterday on June 8th on Semiconductor. He gives the stock a buy rating and has rated it 36 times before. What's incredible is that he has a 100% success rate on this stock. Semiconductor engages in the design, manufacturing, and marketing of semiconductor components. With a focus on automotive and industrial end markets, the company is accelerating change in megatrends such as vehicle electrification and safety, sustainable energy grids, industrial automation, and 5G and cloud infrastructure. The company boasts an extensive network comprising of 19 manufacturing sites, 43 design centers, and 8 solution engineering centers. Trading under the ticker ON, their stock is currently priced at $88 per share, and they've seen amazing growth of over 40% over this past year and are up 8% over the last few months. These guys also had an earnings beat in their last report that came out on May 1st. They reported Q1 earnings per share of $1.19, coming in 11 cents ahead of analyst expectations. They also reported revenue of $1.9 million, which was an increase of 1% year over year. Their next earnings report is scheduled at the end of July, where analysts are anticipating earnings of $1.20 per share. Analyst Ross Seymour recently increased his price target up to $100. Following a meeting with management, he said that ON's confidence in the growth trajectory of their silicon carbide business remains high. Overall, the stock currently has 19 analyst ratings, coming in as a strong buy. That breaks down to 15 buy ratings and 4 holds. With an average price target of $98, that would be an upside potential of 11%. Here we can see Ross's recent rating with an upside of 13%, and on the low end, we do have a hold with a slight downside. Many others have weighed in the past month with some nice double-digit upside potential. And our third top-ranked analyst today is Sean Eyal. He works for TD Cowen and is currently ranked number 10 out of over 8,400 analysts. He has a success rate of 69% over the last 2 years with an average return of nearly 43%, and his most recent rating came in just today on Palo Alto Networks. He has 74 ratings on this stock with an impressive 97% success rate. Palo Alto Networks is a global cybersecurity leader. They provide network security solutions to enterprises, service providers, and government entities. They help secure clouds, automate security operations, stop zero-day threats in zero time, secure hybrid workforces, and respond faster with threat intelligence and security consulting. Their stock trades under the ticker PANW, currently priced at $220 per share. They are up 28% this past year, seeing a lot of growth in 2023, and are up 19% in just the last few months. On May 23rd, they came out with a solid earnings beat, adding to their long track record of exceeding analyst expectations. They reported Q3 earnings per share of $1.10, coming in 17 cents ahead of analyst estimates, and you can see here that solid track record that I mentioned. They also reported revenue of $1.7 billion, which grew 24% year over year, and their billings also grew 26% year over year. Their stock has been gathering plenty of analyst attention lately. They have 29 analyst ratings, and those are nearly all buys. With just one hold rating, the stock comes in overall as a strong buy, with an average price target of $242, which would be an upside potential of nearly 10%. Here we can see Sean's recent rating with a price target of $260. That would be an upside of 18%, and many other analysts weighing in over the last couple of weeks. So there we have 3 stocks that have all picked up buy ratings from top-ranked analysts within the last couple of days. Let me know your thoughts on these companies in the comments down below and what you think of their future growth potential. I always appreciate hearing from you guys. Please keep in mind these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes, keeping you up to date with what those Wall Street analysts are up to. If you made it to the end, don't forget to hit that thumbs up button and make sure you subscribe to the channel. Thanks for watching, have a great day, and I'll see you back here next time.